Party and company to commission account being the commission due. Party and company to bank account being the final balance paid. Consignment stock account data to consignment being the closing stock. Goods sent on consignment account data to consignment to be their account being the loading on goods sent on. Here stock reserve on the closing stock we already calculated 4,000 divided by 100 is on closing stock. The difference is 9,840. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Grade College at Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Financial Accounting, second semester, Unit 4, Session 6, in favor of Accounting for Consignment Transaction. In the last sessions, I already told in a consignment, there are two parties. One is the consignor, another is the consignee. The agreement between the consignor and the consignee we called as consignment. So, consignor is the owner, consignee is the agent. Goods will be sent by consignor to consignee. Consignee will sell the goods to on behalf of their consignor at the risk of the consignor. So, consignee gets the commission, consignor gets the profit. This is the procedure. We'll move on to problem now. Patil and Company of Mysore send goods to, so he is the consignor. Send goods on consignment to Pallavi and Company. Bidder, he is the consignee. Will receive 5% commission on the invoice price. Cost plus profit is called invoice price, and 15% any price realized above the invoice price. This is important. The invoice price of the goods consigned includes cost plus 20%. Patil and Company send goods for rupees 1,20,000 at an invoice price to Pallavi and Company. Patil and Company incur rupees 13,700 towards octroi, which is direct expenditure and transportation charges. It drew a bill for 3 months. Rupees 1 lakh is in advance. Advance given by consignee to consignor as a guarantee against the goods. And company which was duly accepted by the later company. Pallavi and Company spent 1,800 as warehouse rent and 2,200 towards advice. This is expenditure made by consignee on behalf of the consignor. Warehouse and company sold 80% goods for rupees 1,12,000. At the end of the accounting year, Pallavi and Company remitted the balance due to Patil and Company. So, here goods are sent at cost plus 10%. Goods sent at cost plus 20%. If the cost is rupees 100, goods are sent at cost plus 20%. If the cost is rupees 100, profit rupees 20, invoice price 100 plus 20 is 120. So, here goods are sent, what's the cost price 100, 20 is the profit, 120 is the invoice price. Here, see the problem? Patil sent goods for 1 lakh at invoice price. So 1,20,000 goods sent goods at rupees 1,20,000. This is rate divided by 100 plus rate. Formula rate divided by 100 plus rate. What's the rate? 20 divided by 120 into 1,20,000 goods sent. So 26 to 6 are 6 to 20. So 1,20,000 minus 20,000. Real cost price is 1 lakh. Cost. So they send at what invoice price? 1,20,000. How much profit is included? 20,000. So real cost becomes 1 lakh. We'll move on to problem now. Sales made by Pallavi and Company is 1,20,000. 80% of the invoice value, 1,20,000, 80 by 100 is 96,000. On that 5% commission is 4,800. Excess over invoice price. What's the total amount? 1,12,000. See the problem? Here, come back here. Price values 1,12,000 is the total. Company sold 80% goods for rupees 1,12,000 minus invoice price 96,000. Excess is 16,000. On that 15% is 2,400. Total commission. Total commission is 7,200. So first one, 80% of 1,20,000 is 96,000. On that 5% commission is 4,800. The sale is 1,12,000 minus 96,000 gone. Balance is 16,000. On that 15% is 2,400. So total commission payable to consignee is 7,200. Assignment of closing stock. 20% of invoice value is 1,20,000 to 24,000. Add expenses proportionate by the consignor. Only direct expenditure has been considered here. 20 by 100 into 13,000, 2,740. It becomes 26,740. In goods sent on consignment, 20 by 120 is 1,20,000 is 20,000 extra. In closing stock, value of the goods consigned 1,20,000. Sales made by consignee 96,000 as per working note. The balance closing stock is 24,000. On the 20% workout, 20 by 120 is 24,000. It is called loading, is called 4,000. This we have to do when the invoice price is given. Then, formula, consignment to be the account. Goods sent on consignment 1,20,000, which is the invoice price. Then expenses met by the consignor is 13,700. To Pallavi and Company expenses is 4,000. To Pallavi and Company commission is 7,200. Combined sales made by Pallavi and Company 1,12,000. By consignment stock account, there is a closing stock as per working note is 26,740. Actual cost is 1 lakh, but is sent at 1,20,000. How much more? 20,000 is called the stock reserve or loading, we say. Then, here stock reserve on the closing stock, we already calculated 4,000, 20 by 100. This on closing stock. The difference is 9,840. The common journal entries are consignment to their account data to goods sent on consignment being the invoice price of the goods. Consignment to their account data to bank account expenses met by the consignor. Consignment to their account data to Pallavi and Company expenses met by consigning. Consignment to their account data to Pallavi and Commission being commission due to consignee. Pallavi and Company to consignment to their account being the sale. Consignment stock account data to consignment to their account being the closing stock. Goods sent on consignment to their account being the loading. Difference between invoice price and the cost price. Last one, Consignment to be their account data to profit and loss account is a profit to consignor. Then by consignment account 1,20,000 has been sent. On that, how much extra is there? 20. Really enter into business is 1 lakh. Then Pallavi and Company, this is a consignee account. When you make the sale, the entire amount lies with the consignee. He has not sold it. Along on this 1,12,000, he will deduct his BR. This is nothing but advance. He will deduct his advance. He will deduct his expenses. He will deduct his commission. Whatever the balance comes, that will be sent by consignee to consignor. When you made the sale, the entire amount lies with the consignee. What he will do now, he will deduct his advance. He will deduct his expenses. He will deduct his commission. The balance amount sent by consignee to consignor. I will repeat. The total sales made by consignee is 1,12,000. He will deduct his advance, which has been given by him. Then he made an expenditure on behalf of the consignor. He will take back that 4,000. His commission, he will take back the balance amount, 800, sent by consignee to consignor. Hope you understand this point. Then, what I passed the entry same, consignment to bidder account data to goods sent on consignment account. Consignment to bidder account data to bank account being the expenses met by consignor. BR account data to Pallavi account, this is an advance given by consignee to consignor. Then, consignment to bidder account data to Pallavi account being the expenses incurred by consignee. Pallavi and Company to consignment being the sale. Consignment to bidder account data to Pallavi and Company being the commission due to consignee. Consignment stock account data to consignment being the closing stock. Goods sent on consignment account data to consignment to bidder account being the loading on goods sent on. Consignment to bidder account data to stock reserve account being the loading in closing stock adjusted. Then journal entry in the books of Patil and Company. Bank account data to Patil and Company. Journal entry in the books of Patil Company. Consignment stock account data, consignee account. Then bank account data to Pallavi and Company being the final balance received from the consignee. Consignment to be the account data to being the profit made by consignment. Then journal entry in the books of Pallavi and Company. Patil and Company to bills payable account. Patil is the owner. He has to pay the bill to consignee. Patil and Company to bank account. So this expenditure should be met by consignor on behalf of the consignee. Bank account data to Patil of being the sales, the amount sent by consignee to consignor. We are the receiver who sends this to Patil and Company. Patil and Company to commission account being the commission due. Patil and Company to bank account being the final balance paid. Then consignment to be the account. By bank account, this is the total amount received. He paid back the bills payable. He paid back the expenses. He paid back the commission. The two bank accounts, the final balance paid is only 800. This is a final balance paid by consignee to consignor. First, what's the total amount he received? 1,12,000. He paid the bills payable. Then he paid the expenditure. He paid the commission. The final balance paid is 800. Two goods sent on. Only when the invoice price is given, real cost is 1 lakh. How much more? 20,000. This is for this. The closing stock at the invoice price. Here, stock reserve. So this we have to do when the invoice price is given. For a cost price, it is not so. This is invoice price. How much more? 20,000. This invoice price. How much more? 4,000. Difference is the cost price. So this we have to do when the invoice price is given. For a cost price, it is not so. Hope understand how to calculate percentage cost plus percentage. Here 20%, 20 by 120. That's the loading we have to calculate. Hope you understand. So all types of problem you have solved. This is the 6th problem which I have solved here. So all the problems you have solved here. So definitely it will come from the examination, 15 marks. Hope you understand. So we'll meet in the next session with another problem. Till then, goodbye. Meet in the next session with another problem.